Missouri Life Accident and Health Insurance Product. Waiting period between when an individual is hired and when she becomes eligible to enroll in the group plan. Probationary period. The insurance companies promise to pay the policy's death benefit to the named beneficiary, after receiving due proof of death of the insured, as long as the insured died while the policy was in force. Insuring clause. Pays directly to the insured a specified dollar amount per day during hospitalization. Hospital indemnity. Projected, but not guaranteed. Dividends. A notice regrading replacement must be signed by the applicant and producer. In order to enroll in Part C of Medicare, you must also be enrolled in Parts A and B. Insured must wait days, but no later than 3 years after providing proof of loss, before legal action can be brought against the insurer. 60. Federal law requires that every policy providing coverage for a dependent child extends coverage up to age 26. An agreement contractually establishes a price with the intent to purchase, at a predetermined value, the assets of a business should one of the contract participants predecease the others. Buy-sell agreement. This whole life policy is usually written to cover 2 lives, and the death benefit is not paid until the last insured dies. Joint survivorship life. Contributory plans require a minimum of what % of participation of the eligible employees? 75%. Cases in which the individual application and/or medical reports reveal conditions for which further information is necessary to determine insurability, you will need an attending physician statement. In order to reinstate a policy that has lapsed unintentionally due to non-payment, the insured must provide evidence of insurability and the owner must pay all back premiums from the date of lapse plus interest. If the insured is injured while committing or attempting to commit a felony or engaging in an illegal occupation, the claim will be denied. If the initial premium is paid at the time of application, the producer will issue a conditional receipt. A personal statement submitted by the producer regarding the applicant's financial condition, and any personal knowledge of the applicant. Agent's report. Provides that if more than one plan covers a loss, the plans will coordinate so the insured does not get paid more than the entire loss. Coordination of benefits. All individual and group health insurance policies providing coverage for dependents of the insured must provide coverage for the insured's newborn child from the moment of birth. A target premium is established by the insurer, which is the minimum amount that must be deducted from the cash value to maintain the policy to age 100, based on current interest rates, mortality and expense charges. Flexible premium. Any transaction in which a new life policy or annuity is to be purchased. Replacement. A contract in which one party is legally bound to the contractual obligations. Unilateral contract. Managed care plans arranged through a network of healthcare providers, independent hospitals and medical practitioners, which become preferred providers in a specific geographic area. PPOs. It will allow an insured to purchase additional benefits, for a limited amount, at specified intervals in a policy without evidence of insurability. Guaranteed insurability rider. Another name for accelerated death benefit is living benefit. Who has the right to change the premium mode? The policy owner. If the age on the application is stated younger than the actual age, benefits paid will be reduced based on what the premium paid would have purchased at the correct age. If attached to the policy, a copy of the application becomes part of the entire contract. The simplest form of term life insurance for 1 year where the death benefit remains level and the premiums increase yearly as the policy renews up to a specified age. Annually renewable term. Insurable interest must exist at the time of application. What is the main difference between a fixed and indexed annuity? A fixed annuity offers a guaranteed rate of return on your initial investment. An index annuity, meanwhile, may offer greater returns in exchange for greater risk. What are the 3 main non-forfeiture options? Reduced paid-up, extended term, cash surrender. Refers to the location, or jurisdiction, where an insurer is formed or incorporated. Domicile. What happens when the policy is issued, even though the application is incomplete? It is assumed that the missing information is not material to the issuance. Guaranteed renewable for the life of the policy. The benefits cannot be changed and the premiums cannot be altered. Non-cancelable. An accidental death and dismemberment policy provides that the face amount, or principal sum, will be paid if the insured dies due to an accident within _______ days from the date of the accident. 90. The _____________ may change a revocable beneficiary at any time. Policy owner. Statements made by the applicant on the application that are believed to be true to the best of the applicant's knowledge are called representations. The premium is level and payable to age 100 or death of the insured, whichever comes first. The face amount remains level throughout the life of the policy. This policy has the highest total premium outlay. Straight life. If the insured becomes totally disabled, the insurer will waive premiums for the duration of the disability or the end of the policy, whichever occurs first. Waiver of premium. Payments are guaranteed for the lifetime of the recipient. Upon death, payments will cease. Straight life. Who retains all rights in the policy? The policy owner. What is true about offering inflation protection? At the time of application, LTC policies must offer the insured the option of purchasing inflation protection. Adopted children are covered at the date of placement for adoption. Benefits are based on the average fee charged by all providers in a given geographical area. Usual, customary, reasonable, UCR. Which of the following is an insurance company that is organized under the laws of another state within the United States? Foreign. Coverage combines the features of the basic and major medical policy into a single policy. Benefits provide for reimbursement of covered expenses on a usual, customary, and reasonable basis. Comprehensive major medical policy provides a benefit for hospital room and board, semi-private, based on a daily limit of coverage. Miscellaneous hospital expenses may also be provided. Basic hospital expense plan. A person can get an accelerated death benefit only when a physician has certified that person has a condition which is expected to result in death within 24 months. Any changes that need to be made on an application must be initialed by applicant. A waiting period often found in disability insurance and long-term care policies before benefits are payable after a loss occurs. Elimination period. When the initial premium is not paid with the application, the producer must also collect a at the time of policy delivery. Statement of good health. Material versus immaterial representations. Statements that impact the acceptance of an insurable risk are considered to be material. Immaterial representations do not affect the acceptance or rating of the risk. Used when the partners of a business purchase life insurance on each other. Cross-purchase plan. In the event of a claim, this policy normally pays double or triple the face amount. Accidental death benefit. Provision that addresses the frequency of premium payments and to whom the premiums are payable. Mode of premium. Proof of loss is required within days of loss. 90. The insurer's consideration is the promise to indemnify. A whole life policy that is written to cover 2 or more lives. The death benefit is paid upon the first insured to die and the policy terminates. Joint life. Allows the insured to purchase stated amounts of additional insurance every 3 years based on certain ages, events, or specified dates without evidence of insurability up to a maximum age. Guaranteed insurability. A utilization review conducted while services are being provided. The insurer monitors the insured's hospital stay to make certain that everything is proceeding according to schedule. Concurrent review. A contract written by one party, without any input from the applicant, is considered to be a contract of adhesion. Statements in the application that are guaranteed to be true in all aspects. Warranties. A policy will not go into effect until the initial premium has been paid. The premiums paid for individual disability income insurance are disability income benefits received from an individual policy are as income. Not tax deductible, not taxable. An agreement between a third party and a life insurance policy owner insuring the life of an individual with a life-threatening or terminal illness, normally with a life expectancy of 2 years or less. Biatical statement. The insuring clause is found on the first page of the policy. A physician who provides both the first contact for a person with an undiagnosed health concern as well as continuing care of varied medical conditions. Primary care physician, or gatekeeper. The USA Patriot Act was passed as a result of 9/11 attack. Conditions stipulated in the contract for which the insurer will not provide coverage. Exclusions. Allows an insured to qualify for a policy with the exclusion attached, where they would otherwise be declined altogether. Impairment rider. A general report of the applicant's finances, character, morals, work, hobbies, and other habits. Inspection report. Coverage designed to supplement a basic plan. It is written to pay benefits once the basic plan benefits are exhausted. Supplemental major medical policy. An added benefit that may be attached to the policy that supplements existing coverage. A rider. The intent of this clause is to discourage individuals from purchasing an insurance policy while contemplating suicide. Suicide clause. The insured's consideration is the payment of premium. The time period provided after the premium due date before a policy lapses, usually 31 days. Grace period. Coverage may continue in group plan for dependents after the death of the insured up to _______ months. 36. The general purpose of underwriting is to detect adverse selection. Coinsurance is typically used under a major medical policy. If the payer, policy owner, dies or becomes disabled and is unable to make the premium payments, the insurer will waive the premium payments for a specified period of time. Payer benefit. Premiums are paid entirely by the employer and require 100% participation of the eligible employees. Non-contributory plan.